I didn't realize that the Santa Claus rally, what it really means is that all of the indicators are red. I realize, of course, that Christmas has red and green, but Santa Claus, he's pretty much all red. And that's what we are seeing this morning. Even the bond yields are down today, which that means that those are showing red. But guess what? I've been calling this action for quite a while now. I know I was super, super early, but I said that the market needs to correct 10%. I think we're on our way to doing that. Maybe we could correct 20%. Wouldn't that be nice? Well, yeah, it wouldn't seem nice at the time, but remember, we've been going crazy with record after record after record. I'll talk about that more in just a second. But let's start with good news. This is the Good News channel. So let's start with this one. This is from Hey, it's Yashu. Former Uber CEO Travis Kalanick, when asked what he would do if he was still CEO of Uber, said, "Of course, we would be doing autonomy. But I think Elon will take care of that at this point. The entire world is waking up to the fact that Tesla will dominate the robotaxi business." And there's some bulls who think that Uber is a good investment. I don't know. But then Jeff Lutz responds to that. He says, "Hey, Jensen, Sundar, and Kalnick have all recently identified Tesla AI as leading in autonomy. They're well versed in the tech and business model. This is signal." Well, okay, back to the real world. The Dow was down 5%, maybe more. That was just the last time I checked. It might be ready for a turn at 5%. It might bottom out around here, but as you know, I'm thinking maybe we could get down a bit more to that 10% level. The current sell-off is not seemingly related to any news. Important to keep this in mind. All of the indexes have hit the all-time high. I think record numbers of time this year are close to record numbers. And you don't generally get two 20% increases, in a row, 2 years in a row, get 20% gains in the S&P. Now, maybe we'll still end up above 20% by the end of trading tomorrow night, and whatever it is, it'll undoubtedly be close. All I'm saying is it's been a while. It's been building for a while. And then if you talk about Tesla, well, Tesla is following the crowd this morning. Last time I checked, it was down 12% over the last few days from its all-time high. Could easily go to 410, sitting at 418, 419 a few minutes ago. Might even go down to 380. But keep in mind, my estimate for the end of January after the earnings was 410. So if we get back down to 410 or 380, I don't think that would be horribly surprising. And most of our portfolios would still be looking very, very, very good at those numbers. However, having said all that, I continue to think we will be much higher a few months from now, or maybe even weeks. Nick Gibbs chimes in on the whole subject this morning. He says, Tesla has pulled back. He says 12% from all-time high. He says, today, I might start nibbling on leaps. It feels like insider information having FSD 13 right now. Okay, pulling back on, deciding on some leaps. I'm going to add to that, not investment advice, just what he's planning to do. All right, UBS, more good news. UBS said in a note Monday that it expects Tesla to announce its Q4 2024 delivery numbers on January 2nd, with the banks and the analysts coming in at approximately 510,000 units, a 5% year over year, and a 10% quarter over quarter increase. For the month of December. Okay, yes. I mean, the fourth quarter. UBS's estimate is slightly below the visible alpha consensus of 512. So there's a bunch of different considered to be the overall estimate 512, 5.7. I've seen both anyway, but it's all within the same range between 500 and 510. Given the AI-driven narrative on the stock, we don't believe, quote, given the AI narrative on the stock, we don't believe the delivery results will be as meaningful as in the past. This is something I've been saying on the channel for months. UBS analysts noted, emphasizing the diminished impact of delivery figures on Tesla stock performance compared to earlier products. Tesla's energy storage segment also warrants attention. UBS projecting a deployment of 9.1 gigawatt hours for the quarter, a 32% sequential increase, but they don't bring into account that this is something that is going to go up and down in various different months. It could actually be higher because, yeah, I'm thinking it might actually beat the 9.1. The bank notes that the estimate aligns closely with Visible Alpha's 9.6% gigawatt hour projection. However, UBS cautions that energy storage deployments are lumpy, but last month was lumpy down, and I'm thinking this month will be lumpy, not only up, but up. Following the delivery report, the focus will shift to Tesla's earnings call. UBS highlighted that investor attention is likely to center on Elon Musk's commentary, especially regarding 2025 guidance, yes, and his attitude and his mood. For 2025, Tesla's indicated a target of 20 to 30% unit growth. We know that on this channel. The bank says new models, including a lower price vehicle expected early in the year and a refreshed Model Y arriving now, should affect those numbers. Regional trends show varied performance, steady growth in China, not so much in Europe and already in the United States. The bank noted potential EV tax credit changes as a factor influencing near-term U.S. demand. I don't think near-term. Remember, everybody forgets the Trump administration doesn't even come into power until December 20th. They're going to have way more things on their mind than what they're going to do about the IRA. Once they decide they're going to do something about the IRA and or Congress is in agreement and in alignment, then it's going to take months to decide how to change it. This is going to be a June, July, or maybe even December, January thing. Sources said that Tesla China hit 24,000 deliveries. This is not, there's that same report. This is a new report. Sources are saying that China hit 24,000 deliveries last week, and that would be crazy. We'll know that out later tonight, early tomorrow morning. Tesla China exceeded sales. Now we need to see what happens with China and with Europe and US. That is from Chris Zhang, 001. He says, based on order volume from door panel suppliers, the production capacity of the refreshed Model Y at Giga Shanghai will surge to 2,400 units per day starting January 1st. And now that would be what the total existing Model Y does in Shanghai. So starting in 3 days, they're going to be at full production. TriTeslike says his final published number is 502,000. What is your final number? Let me know in the comments below. Now, the Old Stream Media. Remember, that's my new name. I'm going to coin it. I'm going to create a hashtag. The Old Stream Media has turned sour on Tesla and Elon again. Remember, I look at hundreds of headlines every single day. Nothing about Elon being named the most powerful business leader. That was a big deal, not showing up anywhere in the headlines. Nothing about progress on version 13 of FSD. Nothing about the Juniper ramp. Tons of good news. None being reported on the Old Stream Media. I get credit for that name, okay? Maybe somebody else said it. I could be wrong. I should look it up and see if anybody else has used those words. Okay, Tesla Rowdy says this, King County, Washington Metro. So they have a metro in King County. Their van pool program allows commuters to share rides on county-owned vans for a flatly monthly fee of $49. As per the public information officer, Elaine Porterfield, the acquisition of 120 Model Y units costing $6.43 million, including accessories, chargers, and licensing, has just been completed. This is their total budget, $5.5 million for the acquisition of 221 new electric cars to support their plan. They choose Model Ys. The Model Y was chosen as it's the only 7-seat fully electric vehicle that fits perfectly into Metro's cost recovery van pool fare model. The county highlighted that Model Y is also comparably priced to traditional gas minivans, and it meets electrification, federal grant, and employer transportation benefit eligibility requirements as noted in the whatever. Okay, the financial outlook. The 2025 budget shows van pool expenditures for $13.5 million, a significant 56% reduction from the 2023-24 budget. Projections, however, suggest an increase to 20. I think I'm done here. Tesla fan MTL says China is absolutely carrying the quarter again from a volume perspective. Almost all the quarter-over-quarter volume growth will come from China again this quarter, and a little from Europe. No, I think they will be down. The United States will be flat. Implications, downward pressure on both ASP and auto cost of goods. In other words, the margins are less in China, but massive U.S. incentives are an additional headwind on ASP versus quarter three, which will drag auto margin down. Yeah, but he's not adding any of the things that are going to push the margins up. And I don't think they're going to be as big a drag as you think they're going to be. All right. This is Randy Kirk. Hit like and subscribe and notify. Remember to go down and participate in Patreon. That would be fantastic. Get your year in. The donations are not deductible, unfortunately. I'm sad to say. Anyway, if you've got leftover donation money that you haven't figured out where to go with it, hit Patreon. Take care of that right now. Later today, regular programming, Larry Goldberg around 5 o'clock and Brian White at exactly 7:45. Okay, this from the general economic news. According to Global Market Observe, OBSERV, U.S. credit card defaults are skyrocketing. U.S. credit card write-offs in serious delinquent loans spiked 50% year over year to 46 billion. Credit card defaults have doubled since 2022 and hit the highest level since 2010, a year after the financial crisis. The most financial pain has been seen in the bottom income consumers, confirming what Larry and I have been talking about for months and months and months. This is a two-economy system. People under 100,000 not doing well. U.S. consumers have been materially hit by inflation and historically high interest rates. Okay, this is breaking from the Chicago Business Barometer, also known as the Chicago PMI. It dropped. Everybody was expecting it to go up, dropped to 36.9 in December 2024 compared to the 40.2, a big drop to 36.9, and missing market forecasts of 42.5. The latest data indicated that Chicago's economic activity contracted for the 13th consecutive month, recording its steepest decline since May. So that's a little bit surprising. It'll be interesting to see over the next few weeks what we get from the Chicago Fed, what we get from the National Federation of Independent Business, etc. Are we seeing any other softness like this? Also breaking this morning, pending home sales increased 2.2% in November. So this is good news on the other side. The Midwest, the South, the West regions of the U.S. experiencing month-over-month gains in transactions. The Northeast decreased. Year over year, contract signings increased in all four regions, with the West leading the pack. According to NAR Chief Economist Lawrence Yun, listen to this now, consumers appear to have recalibrated their expectations regarding mortgage rates and are taking advantage of more available inventory. Buyers are no longer waiting or expecting mortgage rates to fall substantially. Where have you heard that before? Mortgage rates of 6%, anything in the 6% range, are the average over the last over 100 years. This is a normal interest rate, and consumers have just gotten used to the low ones. Now they're going to get used to these new ones, which might not come down measurably all this year, but we did have some good news in that direction this morning from the bonds. We'll take a look at all of that right now. Let's start, as we always do, with Tesla, who is now down $13.08. It has been down more than that at 418.58. The Dow is down 720 this morning, 42,271, getting close to that 41. Getting closer and closer to that 10% drop. NASDAQ down 364. That is 19,000, could break under 19. We've got the S&P down 101 at 5,869. Okay, we've got the Magnificent Seven 100% down this morning. NVIDIA fighting the pack, only down 24 cents this morning. Meta down 12, everything down very substantially. Red. All of Cathie Wood's down in, accord with the rest of what your expectations might be. Okay, let's take a look now at the percentages. Dow down 1.6 this morning. NASDAQ 1.7. S&P down 1.6. That's interesting. And Tesla down 2.8. So it is somewhat ahead in terms of the normal doubling of the NASDAQ. So 1.77 would be 3.4. It's only down 2.85. We have got Apple down 1.79, Google 1.24, Amazon 2.16, Meta 1.82, Microsoft 1.64, but NVIDIA only 0.5. All right, let's go find out what's going on with that. Well, what happened here? Come on, the New York Stock Exchange to close on January 9 in honor of Jimmy Carter. What? I think it's already closed. Isn't that Martin Luther King's birthday and the celebration? Anyway, bonds, treasury yields dip. There you go. So we've got it down 8 basis points to 4.539. Love to see it drop just a little bit more, get under 4.5. 2-year is down also 7.6. The 1 month is up actually 0.3 of a basis point. Call that flat. Okay, so anyway, directionally, that is very good news. A little rally in the bond market. Lovely to see. Now let's take a look at oil. Oil is actually up 49 cents this morning, although Texas Intermediate is up more than Brent, which is only up 28 cents. Both the Texas Intermediate is up now over 70 at $71.08. Now look at this. I have no idea why, and it's no headline about it. Natural gas is up 20% this morning. No. I'm not misreading that. It is up 20%. But it's only at $4.09. I'm going to go inside. I'm sorry, folks. I'm going to take another second of your time here. I see. What we're looking at is there was a big drop. So this is a response. This is coming back from a large drop to more or less get back to where it was. At best I can tell. Let me look at this again. Sorry. Well, anyway, it's very, very close to its recent highs, which is not surprising. It is winter, but and the President of the United States is pushing very, very hard for Europe to start buying a ton of natural gas from the United States. So this is probably impacting some of that. Okay, gold is down 15, and that is at 2,616. We've got silver back under 30 at 29.5. You've got copper still staying above $4 at $4.09, down 0.66 this morning. You've got the dollar down a little bit across markets. You've got the Bitcoin down 2,000 this morning. As I'm telling you, everything's red. It's just red across the board here. You've got, it's at 91.3, and that's all of the various reporting. Okay, so what we've got is we've got a down market, except for bonds, which are actually up, even though the yields are down, very much along the lines of what I've been expecting for some time now, although not necessarily this week. I was expecting it, I think, in October. But anyway, that's where we are. We've got Tesla moving higher as we speak at this very moment. We've got Larry Goldberg at 5 o'clock approximately. That's never exact, but it's approximately. And then Brian White exactly at 7:45. Of course, you want to stay for both of those. Last night, of course, I did my weekly analysis coming into this week. You might want to go back and take a look at that. I will put the card up there for that one. Final news here. Of course, you can always, tap down on Patreon. I just want to remind you here closer to the end. And Tesla, as we leave you this morning, Tesla down 2.92%, which is $12.62. That's all I got. It has been great talking to you.